is Standard Chartered Bank has less than 5,000 ounces left on the COMEX in their eligible account. That's less than one contract. And what is okay, because the 1,000-ounce bars are never exactly 1,000 ounces. They're like at 4,900 ounces. This is a very prominent player who looks like they are leaving the casino. And arguably, that's exactly what you see these traders, whoever the hell they are, standing for delivery in exchange for physical and leaving the casino, removing counterparty risk that gives you what? Independence. Independence from the rigged environment. And it betrays the price.
Demand for silver has exceeded supply for 2 years, reversing a decade of surpluses. In 2022, demand for silver increased by 18%, reaching a record high of 1.24 billion ounces. Demand for silver used in industrial applications is expected to grow by 2.6% in 2023. Overall global demand for silver is projected to decrease slightly to 1.15 billion ounces in 2023. Despite the deficit, there are still large amounts of silver held by individuals and investors that can help meet the demand. Philip Newman from Metals Focus, the consultancy that prepared the Silver Institute's data, stated that we are entering a new phase in the market characterized by ongoing deficits in the supply of silver. However, he mentioned that this may not necessarily lead to a significant increase in prices. Andy Schectman highlighted that group of traders have been accumulating silver at an unprecedented rate. This has led to the phenomenon of exchange for physical, where contracts are shifted from COMEX to the London Metals Exchange for delivery. This has led to concerns about the availability of physical silver. The LBMA has warned that there could be a shortage if similar delivery demands persist in 2023. Let's watch snippets of Andy Schectman's interview with Liberty and Finance.
I noticed it in 2020 with the rise of the others. We've talked about that a lot on COMEX, where in 2020, this group of traders that was new to the Commitment of Traders report, typically it was just the commercial banks and the specs or the hedge funds that were listed as the largest traders and their positioning on the Commitment of Traders report. That report that's published weekly by the CME group shows the positioning of the largest traders, two groups until there was a third, the others, who took more silver in 2020 than we typically see in the decade. And that trend continued in 2021, and it started to catch, I think, too much attention. And not just by guys like me and you, but too much attention from everyone, and maybe the traders. I don't know who rattled the bushes enough, because we talked in 2022 about this phenomenon called exchange for physical. Exchange for physical is a very opaque way of taking a contract that you have on COMEX that would otherwise stand for delivery, and instead you shift it over to the London Metals Exchange and you take delivery there. Get this, 1.13 billion ounces with a B were exchanged for physical in 2022. How many people know that? 1.13 billion ounces, more than an entire year's worth of mine supply, was taken for exchange for physical off the London Metals Exchange. And maybe this is why the LBMA came out with a letter at the end of 2022 saying, if we see deliveries reminiscent of 2022 here in 2023, there will be nothing left to deliver. Last month in June, we saw 110 million ounces delivered in exchange for physical that would have otherwise been delivered on the COMEX. The preceding 2 months before that, previous 2 months, somewhere in the neighborhood of 230 million ounces. Do you see a trend? So they I think, got too much attention here on the COMEX and now have shifted it to the LBMA and are draining the exchanges as the price has come down. And interestingly enough, June 30th was the last day for the July delivery contract for everything to be in. And we saw what is normally a very prominent player in the futures market perhaps leave for good. Now, this is a very strange month where we saw almost 150 million ounces in open interest just disappear. And what was strange about it to me was the managed money that actually sold, I don't know, 20 million plus ounces of long silver contracts and then disappeared. Now, they didn't go short the way they normally do. When they sell their long, they usually go short, take the other side. They just left the rigged casino. But more relevant than that was Standard Chartered Bank, who had to come up with 12 million ounces of silver. And if you look at the registered category, it increased to 38 million ounces of registered silver. People may get nervous by that. I just need people to understand that to go to this kind of inordinate effort and take the metal off the exchange, to deliver it off the exchange, says something tremendous. It is that the most sophisticated investors are using this rigged market to leave the system and gain independence.
During the upcoming Leadership Summit of the BRICS nations, which will be hosted by South Africa in August, there is a possibility that new members will be included in the group. BRICS nations may expand to include 5 new members, including Saudi Arabia, Indonesia, UAE, Egypt, and Argentina. China supports the expansion of BRICS and welcomes Bangladesh's application for membership. The BRICS group of nations, consisting of Brazil, Russia, India, China, and South Africa, will discuss the possibility of introducing a common currency. The Foreign Minister of South Africa, which is hosting a summit of the BRICS leaders, made this announcement. Andy Schectman believes that trust in countries like the BRICS nations is increasing, while trust in the United States may be declining. The U.S. dollar's status as the global reserve currency is being challenged, and some experts believe that gold could play a role in a new system. While the U.S. dollar may not disappear immediately, it is important to be aware of the shift towards a multipolar world and the potential role of gold. Let's hear from Andy Schectman.
I think we have the expansion of the Shanghai Cooperation Organization. And I have felt for a while now that the BRICS nations will combine with the Shanghai Cooperation Organization. The players are largely the same. To me, when you talk about the COMEX, is a note that just came out on the 29th of June that Moscow, the new Moscow exchange, plans on trading in gold futures in the very near future. In fact, in July, they will launch their new gold and silver futures that will have delivery in, I don't know if it was November and December, but it is a futures contract with delivery options. And one of the things that I was thinking about in the way that they could certainly harm the Western rigged system would be just to issue an AM and PM fix like we were told they're going to do, but set an AM fix, set the fix right away for silver at $50 an ounce and gold for $3,000, and watch what happens to all of the Western supply that immediately arbitrages eastward and never comes back. And I think these are the kind of things that they have in mind. And all of these events that they're doing are little by little by little by little, these pieces are being put into place. And I think amongst those who understand that the dollar's global role centers on trust. And I would argue that trust is waning. And when we talk about the rise of another system, the only way this system will work will be through the extension of trust. And that's why I think that precious metals like gold, we were told by Jim Rickards that August 22nd at the new meeting in Johannesburg for the BRICS countries, he believes they will issue a currency largely pegged to gold, if not some other commodities. And the way that you make that work is to have the veracity of that gold shown on a distributed ledger, and to do that right, you have it audited and with great transparency. Now, I'm not saying the dollar will disappear all at once, but what I am saying is to not acknowledge the pieces that are being rapidly put into place all around us. Gold's role in this, and actually distributed ledger technologies' role in this new system, I think will be a mistake. And every single day there is a new story. What started out 3 years ago as every quarter now becomes every day, and sometimes multiple times per day, another story that fits this agenda, this growing narrative of countries coalescing together using commodities and mutual beneficial cooperation into what appears to be a new multipolar world where I think gold has a very relevant role. So I just wanted to say that for those people out there who think that countries like the BRICS lack the trust of the rest of the world, I would agree with that statement. I don't think the United States has much of the world's trust any longer either. Fortunately, I feel we are on the heels or the foothills of a big change. And if Jim is right, and they come out with a gold-backed currency and a bond market to support it, as he surmises, things are going to get very interesting as we head into the fourth quarter.
The price of silver has paused after reaching a high near $23. It is currently supported by the 200 DMA and the MACD indicator. If the price falls below $22.60, it would invalidate the bullish chart pattern and increase the likelihood of a revisit to $20. However, if the price manages to rise above the resistance zone between $23.05 and $23.20, it is likely to continue its upward movement towards the next level of resistance, which is found in the range of $24 to $24.20. That's all from us. If you like this video, please subscribe, like, and click the bell icon to be notified of future videos. We hope our content has helped you in your trading endeavors.